Hi, I'm Keith McCullough. Welcome back. Today I wanted to talk about a big risk signal we got in the US stock market yesterday. And it's not one of these signals that you tend to hear about from time to time in the media or wherever else. It's not a 200-day moving average or this kind of chart or that. We have our own process here at Hedgeye Risk Management. And one of the main things that we look for is a three-factor composite signal that considers price, volume, and volatility. So I want to go through three quick charts just to show you the setups and kind of give you a bit of a teach-in in terms of how we look at it, because it's really simple when you boil it down. So the first thing, and again, it's just a very bullish setup, and it could be anything, for anything that ticks, any security. If I see that the price is up and the volume's up and volatility on an implied basis is breaking down, that is very bullish in terms of an immediate term signal. Now the second chart is bearish. So again, if price is down and volume is up and volatility starts to rise on an implied basis, that's a very negative signal. So that's actually a very negative signal that we got yesterday. So what happened in the marketplace, and we'll just contextualize it with this third chart, what happened in the marketplace is that you actually had one of the bigger down days that we've had in a month from a price perspective. So again, price was down, but volume, interestingly, was up about 13% versus what we call our immediate term trade duration average. And at the same time, volatility, and this is probably the most important point, looking at the front month of volatility in the equity markets, so the VIX, that broke out above our intermediate term trend line of 1491. So again, look at the chart. Now you have bullish trade, bullish trend in VIX. Trade support, you can see that at 1256. Trend support, which was resistance, is 1491 for the VIX. So that's that. That's a very bearish signal. We have not had a signal like that throughout the year. As you know, we've been very bullish on the equity market, and we've actually been quite bearish on volatility. We've been talking about fading the fear or fading the fear mongers. Well, at this point, I'm not in the business of doing that. I'd be quite concerned about this setup because it's the first time we've had this kind of a signal. And again, as you can look back to October, the volatility index could easily go to 20. And in that type of a setup, you don't want to be buying the darn bubble. And that's that. So again, if you have any questions about this, please send me an email or tweet me. @KeithMcCullough is my Twitter handle.